Good evening, everybody. Doc Severson here with you from TheoTrade. Tonight we're going to be talking about the trap trading system, how to generate faster, more accurate profits. All right, this is our standard disclaimer. I'm not going to read through this entire thing. It basically says that if you don't take trading seriously, if you don't build a trading plan for this and treat this like a business, you could potentially lose all of your money doing this. And we see people doing that, and that's not good. So we want you to take this very seriously, exercise tight risk controls. We'll talk about some of that tonight. Copyright disclaimer. Again, please do not share this material with anyone else without checking with us first. We're easy to work with. Please just email us at support@theotrade.com if you have any questions about that or any concerns before you share something. Please do that. Okay, about TheoTrade. TheoTrade is a firm which is dedicated towards providing the best education for the stock market, options market, futures market that's out there. It is not just myself. It is also the founder, Don Kaufman, Slim Miller, Jeff Bierman, Tony Rago, Corey Rosenblum. So all of us are professional traders. This is what we do, and we are trying our very best on a daily basis, live in front of everybody, to provide the very best trading education, the lessons that we've learned over the years, so that we can save you the time and agony of making the same decisions and mistakes that we have made. Okay, so some of you may know me, some of you may not know me. I do recognize some familiar faces and names that are out there. Again, my name is Doc Severson. I am located in beautiful downtown Westerville, Ohio. And actually, the weather is great this time of year. So we have excellent weather about, maybe 7 months out of the year. And the remaining 5 months, you can have them. I think somewhere else is probably a better location. So 7 months of the year, this is a great place to be. And again, I'm a husband, father of 3, student pilot, still working on that. Reformed engineer, used to be an engineer, no longer an engineer. So I did quit my 6-figure telecom job to trade full-time. I'm one of those guys that you've read about, right? So I could not take it at my job for one more day. It just got to be that point where you're pulled by inspiration and you're driven by desperation to make a change. And that was me back in 2005. So I've kind of at gunpoint, I've sort of gotten into this whole coaching thing because what I like to do is I like to help people. And I like to explain things, and it sort of made a very natural fit. So I've been an options, technical analysis, and neuro-linguistic programming. That's what NLP is. I've been a coach for TheoTrade the past 2 years, and I've actually been coaching now it's coming up on 13 years of this. So I have been trading for 22 years, and what I like to do is I like to break problems apart and to solve problems for people in a very innovative way, to do things a little bit differently than others do. I've also been working with thinkorswim for about the last 12 years, which is not quite their entire history, but a big chunk of it. I'm also the author of a book on trading, which is called Hacking the Holy Grail. Many of you out there are looking to find the Holy Grail. It does not exist except between your ears. So that book's out on Amazon again. If you're interested, it's available. So tonight, the learning objectives, what we want to cover in tonight's webinars is how and why price moves the way it does in our charts. Perhaps you've never asked that question. Why does price move the way it does? Perhaps you think it's just some kind of random walk, or it's absolutely random whatsoever, right? There's no pattern to it. I believe there's an answer for that. So why entries that feel good usually don't work out for us? Maybe you haven't thought about that one either. Why you will resist making smart money entries. You know about the smart money. Why is it that it's so hard to be the smart money? What is this trap of which you speak? And why are emotions create the velocity of the trap? I'll talk about the 3 rules to spotting the trap trade entry. I'll give some examples on how to use this trap trade setup. And then we'll go over next steps and how to incorporate this signal into your trading. Does that sound fair? Okay. Do me a favor, if you would. We'd like to work together on this, and if you will be so kind as to hold your questions until the end of the session, we'll get out of here much, much faster. We'll get out of here much, much faster. So I used to do this all wrong. I would answer questions all the way along, and then about 3 hours later, I'd finally finish, and nobody was happy with me. So I've learned my lesson. I will hold off on answering questions until the end of tonight's session, and then I'll be happy to do so. Part 1, the smart and the not so smart money. Why price moves the way that it does in all financial markets, and that is all financial markets. So I've been trading the past 22 years. I've been sitting in front of a screen for a big chunk of that, watching little candles go up and down, up and down. And so over that period, I've logged a lot of time just staring at charts. If somebody doesn't know anything about trading, thinks that we're half insane, just staring at charts all day long, looking for edge. The screen time adds up. If you just take the last 12 years that I've been doing this full-time, and full-time means I'm here full-time. 252 trading days a year. I don't remember the last time I took a day off. Conservatively figure about 5 hours a day watching price. And that's over 15,000 hours of watching candlesticks dance up and down on the screens, up and down. Right? So I do respect the probabilities of random walk. I would contend, though, that I see the same behaviors and battles every day and every time frame, again and again and again. You've reached the point where you say, we've watched that movie before. So here's Gladwell's Outliers. I don't know if any of you have read this book before. It was kind of, it made a little bit of a splash when he released it. Malcolm Gladwell's a smart guy. He concludes, after studying elite performers, that it takes at least 10,000 hours of dedicated practice in a pursuit to achieve mastery. That's pretty intimidating. I'm of the opinion that you'll never truly master markets because they're a moving target. It's kind of like golf, right? Like playing golf, even the best never achieve perfection. They got to practice at it all the time. You do get to the point where you've seen this movie before, though. You've seen this movie before. So I've seen a thing or two along the way. It's kind of like how a parent understands and intuitively anticipates the needs of their child. You begin to do the same thing with markets as they move. You begin to anticipate what they're doing. It starts to become a subconscious activity for you. So when we first start to trade, we see the same commonly available information that everybody else does. So all of you that are watching CNBC or going out to the same sites as everybody else like MarketWatch, and that's one of the reasons why most retail traders enter and exit at the same time. But over the years, you start to see the moves within the moves that generate more edge to those that can separate their feelings from their actions. Separating your feelings from your actions is one of the big hurdles that any retail trader has got to do. Now, what's important for me to do is kind of define the 4 cycles to a market move here for you, because we see the same things happen over and over and over again, constantly, yet every retail trader out there thinks that this is the first time they're ever seeing this type of move. So we go through these 4 cycles. Begin with disgust. We can start with really anyone, but disgust is a good place to start. Okay, market sells off like crazy. Everybody is disgusted, sells out at the bottom. And then what happens is, after a corrective period of consolidation, you see a disbelief rally, and it's usually right from the lows. Nobody can believe that the market is rallying, and nobody trusts the rally. Everybody just assumes that this is just going to roll right over again, and so the market climbs this wall of worry. But finally, it hits what's called acceptance, and people generally agree, it's the conventional wisdom, oh, yeah, the market's heading higher at this point. We all accept the fact that the market's heading higher. And then finally, what happens is euphoria. Euphoria hits because it seems like every day is a green candle. So everything is euphoria, at least for the bulls. And guess what? The cycle repeats over and over and over again. You can see on the right side of the screen here, we have the next disgust phase kicking in. So you'll see these happen over and over and over again. And actually, you'll see these intraday happening over and over and over again. This also brings the second notion that I want to speak with you about tonight. I don't believe in this terms of overbought and oversold. I haven't seen overbought and oversold work in the markets for a number of years, specifically since quantitative easing became fashionable by the Fed, right? So what was only hinted and talked about in whispers, like the plunge protection team, came fully out of the closet back in 2010 when Bernanke at Jackson Hole started talking about quantitative easing. And the market's been different ever since. It's never been overbought, oversold, because what's overbought becomes a lot more overbought these days. But what does happen in the markets, and I see this whether it's intraday or whether it's a longer-term charts, is range contraction leads to range expansion. Range contraction here leads to range expansion, which leads to range contraction again, which leads to range expansion, to contraction, and back and forth, back and forth, back and forth. Okay, so now that I've got these kind of concepts laid on the table, this will make more sense what I'm talking about later on tonight. What happens is trends to the upside, in this case, trends would suddenly just reverse, like out of nowhere. How did that happen? Why did that happen? Okay, and so trend to the downside would all of a sudden just reverse as well too. And this just goes back and forth and back and forth. Now, something to keep in mind as well too is, and this is a relatively simple thing, something I'm not really going to talk about tonight, but think about this. Think about how simple this is. Rising patterns always break to the downside eventually. Descending patterns always break to the upside eventually, don't they? It's the laws of physics, right? This is Newtonian. It has to work this way. So all market behavior is due to emotions. All market behavior is due to emotions. So I don't care if the majority of trading volume on an ETF or a stock is due to high frequency trading. I really don't care about it. And actually, it warms my heart to see that the HFT is no longer getting the publicity that it used to be as the bad guys. All that seems to have gone away since we put some distance between us and Lewis's book, thankfully, okay? Or that the majority of the buy-sell programs are due to algorithms. I don't care about that. Someone is programming these systems, and it's not artificial intelligence yet. What we see is an amplification of these human emotions of fear and greed displayed in the price charts in full view of everyone else. The market's trying desperately to tell us what it's doing. So few of us are able to actually stop and look and see what the market's trying to say. So it's all there for you to see if you bother to think about what you're seeing. Okay, so let's look at the case of Jim, the retail trader. So we're going to use a typical retail trader here. We're going to call him Jim, and we're going to do a couple of examples about what he's doing and what he's not doing. And this may resonate with some of you. Actually, it should resonate with everyone, since this is typically what retail traders start out doing when they begin. So Jim's a family guy. He's still working during the day. He's fairly new to investing and trading. So pretty much everything that he's learned about investing and trading has been through a TV commercial, which is just like everybody else. Everybody learns most of their initial education about the markets from TV commercials. So Jim has the mechanics down. He knows all of the studies and how to work his charts. Good for him. Jim's a good guy. All right. So there's a good chance that Jim has far too many studies on his charts, like most new traders do. See if you recognize this chart. Okay. This is what happens. Newer traders tend to substitute trailing studies instead of using a price-based focus. Hint, hint, this is a little bit of foreshadowing towards the rest of today's presentation. There is a mistaken belief that studies are somehow more authoritative than the price itself. This is what we all do. We start by learning about price, and somebody somewhere starts to tell you about candlesticks or bars or open, high, low, close, and your eyes glaze over, and all of a sudden you see that cool looking study like a MACD histogram, and you kind of, I like that. It's green when it goes up and it's red when it goes down. I like that. That's easier. So we kind of drift away from price, don't we? And we almost tend to obscure and obfuscate the price by all these studies that we put on top of it. You can't even see the price in this chart, right? This is what we all do. Everybody goes through this, except for those of you that are trading off of numbers. All you quants out there, right? So this is more a chartist thing. So let's go through an example. Let's see how Jim processes the entries on his chart. So we're going to walk through some entries here, and let's just assume that an entry here, we're going to make this super simple, and we're going to say this stochastic momentum index, if it gets below negative 40 and it hooks up, we're going to say that's a buy signal. So we're going to say that these are buy signals here. So all these are potential buy signals. All these are potential buy signals. Okay, simple strategy. Let's see how Jim does. So here's the first one. Let's see what Jim does. Okay, it doesn't feel right? Because the price is pulling back. You see red candles here. It just doesn't feel right. And so Jim hems and haws, and he goes, well, it doesn't feel right. I want confirmation on this one before I enter. And so he misses that entry, and he goes, oh, all right, I'll just do the next one. And so that one doesn't feel good either because it didn't pull back as far this time, and he didn't take that one either. And here's the next one. This is a really good entry, and Jim hems and haws because there's a lot of red candles there, and it doesn't really feel very good. See if this see if you recognize this attitude here, guys. Here's the next signal, and Jim's just, he just keeps walking away from these, and finally he likes this one because, hey, look at the strength of this. This one really feels good. I really feel good about entering this one. So he takes the entry, and then not long after that, he is one unhappy guy. All right, what did he do? Jim took the entry that felt good. Just like most other retail traders, Jim was affected by, lately it's been called FOMO, right? Fear of missing out, FOMO. You see a market running away and you think, my God, I've got to get on that thing. But all the pullbacks, they don't feel too good. So what you find is the best entries that you will see are the ones that don't feel very good. So we're going to be talking a little bit more about this tonight, because most of the entries I will bring to your attention tonight are not necessarily going to feel good. But I've got to get you over that transition. I got to get you over that hurdle, because to be successful in this business, you got to do the things that are hard to do, not the things that are easy to do. The things that are easy to do are taking the long up here. That's not what we want you to do. So Jim was trading not to lose, and this is what I see a good 90 to 95% of retail traders doing. They're trading not to lose instead of trading to win. You got to learn how to trade to win. Actually, we know how to trade to win, and then somehow we lose that ability as we start to get trading experience and we get our fingers burned. So we mistakenly think that the way to success is to trade not to lose instead of trade to win. This is a transition that nearly every retail trader goes through. It's part of your progression. You're supposed to do it this way. So Jim was waiting on certainty and for the price movements to feel good before he entered. The very thing that he was employing to keep him safe and avoid losses in his trading is actually creating the losses. Isn't that interesting? So the more that you try to protect against losses, the worse that your trading will be. That's what happens. We go through this phase. Everybody goes through this phase where all of a sudden you get your fingers burned, and then you start trying to trade not to lose. And this is what creates opportunity on the other side. And actually what I'm going to show you tonight is how to get on the other side of that trade. This is what the trap is all about. So Jim, in this case, will continually get bad results until either he fixes this condition, identifies it and fixes this condition. Somebody needs to get in there, stick their boot in the door and say, Jim, stop it. Or Jim will simply quit the business. So that begs the question, can we take the other side of the trade from the trader Jims of the world? Yes, we can. That's the whole idea of it. Better to give than receive in this case. So look for conditions where we can catch these weak hands bailing out of their positions, having waited too long. Can we do that? Yes, we can. So let's learn how to play on the other side of the smart money and look for conditions where we can spring the trap and enjoy a quick move on their behalf. I think you'd be surprised how simple this is. And perhaps it's been in front of you the entire time and you just didn't see it. So let's see an example of this trap trade setup, shall we? Here was a trade that I took yesterday afternoon. So this is Eastern Time, 1442. For those of you that are militarily challenged, is 2:42 in the afternoon. So this is what I see all the time. I see price moving in waves. And this is what's happened after 15 years is that, you know, I can't find things in front of me, but I can see waves in the price. And this is what I see. Little movements like this, lower highs and lower lows showing a change in trend to the downside. I will see this change in trend to the downside. And then, oh, by the way, there's a little bit of a trend line there showing up, which is nice. I like that. I like when price reacts at a trend line. Now, what did we say earlier about downtrends? Downtrends will eventually break to the upside. Every descending pattern has to break to the upside. It has to. It eventually has to, unless it's going to go to zero. Okay, so this is where retail traders feel comfortable going short, down here. Why? Well, that's because it didn't necessarily feel good, and I would admittedly say this is a very aggressive short because it's coming off of a higher low. So that is probably not where I would short, but after we make a lower low and a lower high, this is an ideal place for the smart money to get in and take the short entry. But of course, nobody takes that because it doesn't feel necessarily very good because you're still under the influence of the uptrend at this point. So after this smashing move to the downside, now all of a sudden everybody gathers up their courage and says, now I'm ready to short because it feels good. I have confirmation now. I'm ready to participate in the market auction theory. So what happens to this trade? Well, that's what happens to this trade. Our entry conditions have been met. The trader Jims subsequently are getting squeezed out. Identifying when these conditions show up where the weak hands are getting involved way too late and the smart money pounces on this. This is what we want to find. So this is a very simple futures trade. Again, I was only in this for just a few minutes. It normally does not take very long to force the weak hands to capitulate. What I would also say is what I like about this type of entry is notice how rapid the movement is. So there are movements, whether intraday or whether it's a daily chart, swing trade, anything like that, where sometimes the price will wander around for, in the case of an intraday trade, maybe minutes before you finally start to get a movement in your direction. These are not like that at all. These have a lot of velocity behind them. And this is because if you're taking a short position down here and all of a sudden you're wrong, you're either being stopped out or you have to punch out or eject at a market order. And that helps, of course, you're buying it back and that helps provide that fuel to the upside. This is exactly what happens. And so these tend to be very rapid movements. So if you're into intraday trading and are not particularly fond of taking a lot of heat or spending a lot of time in a position, these are ideal for that. They're very rapid. Okay. So the smart money and the not so smart money. The not so smart money will always wait until they've processed too much information with the hope of taking as much risk out of the trade as possible. They're looking for confirmation. They're looking for everything to look. They're like Ulysses, waiting for all those axe handles to be lined up so he can shoot an arrow through them. By doing so, they've actually added more risk to their trade. Think about that. By being more conservative, you're actually adding more risk to what you're doing, believe it or not. So by waiting until the entry conditions felt better, they've essentially sealed their fate in the trade. So as far as I know, everyone does this when they first start trading, and perhaps for years until they figure this out. This contributes to the pervasive sense that the market is out to get me. You don't have to raise your hand. You don't have to type into the chat window, but I just want you to mentally raise your hand if this has ever happened to you. If you've ever said, hey, the market seems like it's out to get me, or as soon as I go long, the market's going short. So you tell all your friends, hey, just fade me. Whenever I go long, make sure you go short because you're guaranteed to win. If you've ever said that before to your friends in jest, but you know it's killing you inside, this is why. The smart money has learned to ignore and even fade those desires for certainty and is looking for these exact conditions in the majority of the other side. So now we're going to get into the rules and the setup. What signals precede or signal the trap? And oh, by the way, guys, this is not just intraday. This is also swing trading. In fact, I'll show you a tool that you can use, which is really better off for swing trades. So if you're looking for something which is more of a longer term swing trade, which maybe, you're looking for something that's 2 days to 2 weeks, these are ideal for that. So before I give you the signals, some of you are going to be skeptical. I get that. You're going to say, well, this is too simple. Is that it? Yes, it's a fairly simple signal and concept, but why doesn't everybody do that? If it's that simple, why isn't everyone trading it? Well, good question. That's because it's hard to do. You might also ask a question, why don't traders just buy low and sell high, right? Why are the simple things in trading so difficult to execute? Because they're hard. It's simple to say, it's harder to do. So I have no fear of this signal being arbitraged, faded, or retired, right? As long as there are inexperienced and not so smart money traders in the market, this signal will continue to work. As long as we have movement in the market, this signal will continue to work. As long as rising patterns break to the downside, this signal will work. As long as declining patterns or descending patterns break to the upside, this signal will work. So here we go. Here's the 3 primary rules, and you don't have to write these down right now because you will get a copy of this recording. So whether or not you're attending this live or you're watching this through a replay, for those of you on the replay, you can write this down. So number 1, we want to see an established swing on our anchor chart, which translates into a trend on our signal chart. So an anchor chart is going to be something like if we're trading intraday, and maybe we're using something like a 200 tick chart, this is going to be something like maybe 25 times that level, so like a 5,000 tick. Or if we're using a 2-minute chart to spot our trades, we're going to be using an anchor chart like a 50-minute chart, something like, like a 25 times larger. Typically, if we're using something like a daily chart to enter, I'll be using a weekly chart as an anchor chart. So what I'm looking for is an established swing, right? So an established swing, if I'm looking for long, I want to see that anchor chart heading higher. I don't want to be trying to pick the bottom or catch a falling knife. Okay, so an uptrend is a series of higher highs, higher lows. A downtrend is a series of lower highs, lower lows. You guys know that? Now, we want to see a change in polarity occur on our signal chart, reversing the prior trend. So what I'm talking about here is, let's say if we're going to look for a long, we have our anchor chart heading higher. So this is maybe like a weekly chart heading higher. We have a nice big swing to the upside. But our signal chart is a daily chart, and maybe it's going to do something like this. It's starting to reverse. It's starting to reverse its trend. So this is the signal chart. Here's the anchor chart, right? The weekly anchor chart. So this is our signal chart is reversing. Uh-oh, what does that mean? Well, it's giving us opportunity. So a downtrend will start this process by printing a lower high, right? So most trends on the signal chart will function within the bounds of a trend line. So what we normally see is on the signal chart, like I talked about here, is that you'll see something moving down like this. Normally it's a trend line like this. And I'll see this intraday, I'll see this on daily charts, I'll see this on any time frame that you name, on just about any issue, function, asset you can name. So downtrends will break the trend line to the upside. It's very simple. Again, downtrends, if there's something on the signal chart, which is a downtrend like this, that will break that trend line to the upside. And that's what we care about. This will break to the upside eventually at some point here, especially after a higher low. That's where we get the move from. Yep. Okay, so by now you have a signal which is highly likely to squeeze out the not so smart money traders. Remember, one thing that gives us power is this sort of notion of reversion to the mean. So if we have a weekly swing to the upside, which is going in this way, and here's our daily chart, what's happening is the daily chart is kind of just taking a quick pause, maybe in the opposite direction, and then pretty soon what will happen is you're going to see that revert back to the trend that the weekly chart is in, that anchor chart. And that's what we want to look for here. So we also see this same signal work on larger time frames, as I said. So this is a daily chart signal on the full S&P. So notice what we have here. We have a nice old trend line, don't we? We have a nice trend line here. We have a former uptrend which has taken a little pause, has taken a little soiree to the downside here. And what we're going to look for is that to start to break that descending trend line to the upside. And oh, by the way, some of you may have already installed this. This is the pivot array signal. This is the pivot array indicator that we have, and is showing a nice little entry and a little break above there. So it's actually emailing you out and saying, hey, S&P just broke. Hello, well, I might want to do something here. As you can see, this has led to a reversion back to the mean and the main trend. This is precisely what we want to find. Yeah, kind of like a flag. Some of you are saying kind of like a flag. So here's the swing trade results and net profit of 115%, and not that long, you know, we're only talking about a week or two. So the characteristics of the trade. During the period leading up to that trade, the market was universally bearish or negative. Remember that, okay? So this is important because notice how the market went into this sort of like little movement like this. And let me tell you guys, after a big long bull move, any red candles whatsoever, all of a sudden everybody just goes ballistic. Everybody goes completely bearish. And every article that you're going to find on Market Watch or CNBC is going to be, you know, is this the end? And it's going to completely, you know, everybody's going to be saying, oh, wow, I should learn how to short. And, you know, we can do quite the opposite when we're actually in a bear market. We can see too many bullish things happen, right? But in this case, the negativity just gets out of control down here. And this is where people are thinking that, hey, maybe this is the end. This is the beginning of the end or the end of the beginning, right? So this thing is ready to roll to the downside. And I better get on here. And then all of a sudden what happens is that descending pattern breaks to the upside, and there's people scrambling to get out at that point. So this is what always happens, right? Traders begin to feel more comfortable about placing short positions, and naturally, this is where you place too large a position because of this comfort factor. This creates the velocity of the short squeeze that follows. So let's see some current setups. So these are ones that came out of the pivot array scan, which I'll show you here in a minute. Recently, like, here is a reversal on Boeing. Boeing is a stock that people love to hate, right? They love to hate Boeing because it ran away without them, and so they feel rejected. So Boeing had, you know, a couple of tough months, in the middle of a huge uptrend, right? It's allowed to pull back a little bit, and now what it's doing is it's actually reversed to higher highs and higher lows. So the pivot array told us about that a couple of days ago. So that's Boeing. Here's another one. This is FedEx. FedEx is going through kind of the same thing. Here's that trend line, which is coming down here now. So it's kind of gone through its corrective period. It's gone from range expansion to range contraction on a larger time frame scale. And now that descending pattern is starting to break out to the upside on FedEx. So we see these things popping out all over the place, and actually this is what does the work for us, is the pivot scan array. I can see this happening on the daily charts. I can see this happening intraday. So even intraday, you see descending patterns breaking out to the upside on a higher low. Or larger time frames. If we go out on time frame with a longer time frame trend, we see these also setting up with a higher low as well too. So we can use the scanner to find these. We can use tools like thinkorswim, bring up the scan, and we've got specific scans to show how to identify this, right? So we can create a dynamic watch list based on the scan results. So perhaps some of you didn't know about this, but you can actually build a watch list that dynamically updates based on what your scan is created. What you can also do is, if you lack the activity, if you're tired of being, quiet activity, right over here is a place where you can select to be notified if there is a different hit on the watch list. So as the watch list updates with a new candidate on there, you can be notified, you'll be emailed, or actually even texted if you want to, on your mobile phone, and it said, hey, pivot array, new signal. So this is really, really cool, okay? So bull and bear traps, you've heard these expressions before. They usually occur when the majority assume that the markets will move in an agreed upon direction. When everybody sees and feels the same thing, they're likely to be wrong. So they usually do so temporarily, then collapse in the opposite direction. Being able to anticipate, this is what I want you guys to do from tonight's session, is learn how to start to anticipate. It's not about predicting the future, but what you're doing is you're anticipating. You're using technical analysis not to predict the future, but to give yourself a decision box to which to work with. So we don't use some magic black box forecasting tool to use it. Come on. Seriously, guys? Nor some obscure sentiment study which we can't share with you because we're using price for this. It's so simple to use price for this. So this is sort of what I'm talking about tonight, is that price is really where it's at because it is the quickest and fastest study out there. It is not delayed. There's no lag with price. It's very pure. It will never lie to you. It will never give you a false signal. Sometimes the most powerful tools in trading analysis are right in front of us. It's just that we didn't stop to think about it. So now what I want to do is I want to wrap up tonight by talking to you about next steps. Where do you go from here? So where do you go from here? How do you apply this? Okay, so you've already learned quite a bit tonight, probably more than you expected to. Let's review what we've been over. We are looking for an established trend on our signal chart. And we're going to anticipate that at some point we're going to see this polarity interrupted, right? So what I'm talking about here, again, let's just use an uptrend. We have an uptrend in place, and all of a sudden what happens is a lower high gets printed, it catches everybody by surprise, and it starts to pull down into more of a corrective pattern. Okay, so we're going to pull into a downtrend here, and more than likely we'll see some type of trend line. We'll also see a trend line break if the reversal has legs. So once the polarity is confirmed to change directions, we're getting the very first entry into the new trend direction. Let me draw this out again. Okay, so former uptrend starts to work into a downtrend, and what we want to look for, and this is the real key here, is if we have a good trend line to work off of, number one, and this is my favorite signal. My favorite signal down here for a downtrend reversing to an uptrend is to take off of a higher low here. Higher low is a much better signal because this is precisely where the not so smart money is entering, because they couldn't get on here and they didn't want to get on here. That didn't feel good. And all of a sudden now this feels really good. And this is where you see these crazy moves like this, where all of a sudden the shorts cover like crazy as it breaks that trend line, because you got them on the run. They're all wrong. And they're learning that it's not a good thing to trade not to lose. They're waiting too long. They're waiting until things feel good. So being the first one on, you are the first passenger on that new trend. It's not going to feel comfortable. You're going to want to delay that. It's not going to feel comfortable. But being the first passenger on that new trend is where the opportunity is. This is going to make you into the smart money. So I just walked you through the basic steps of what a trap trade entry. You can see why it's called a trap. You're trapping the trader gyms of the world. You can use this for any strategy that takes advantage of a quick reversal. You can play credit spreads on these. You can play debit spreads, directional debit spreads. You can play some type of ratio spread. You can play futures contracts against this. You can play long options if that's your game. You can also just go long or short stocks if you just want to keep it simple. You can do whatever you want to in terms of a trading strategy. You've found a quick reversal. The edge is right there. It's up to you to take advantage of that edge through your strategy. So I'm hoping that for some of you, this information gave you a little bit of an aha moment, and you know exactly what to do from here. You know, others of you may say, well, okay, I need a little bit more than that. So maybe I'm slow. It took me 15,000 hours of dedicated chart exposure staring at screens all day long to start to see the signal. I did not see the signal until just a few years ago. And all of a sudden I'm like, wow, this has been staring at me in the face all these years, and this is really the key to edge. So I don't feel like I'm giving up a secret tonight. This is not a secret because you can tell people that are the not so smart money about this signal, and they will still be unable to take it. They will still be unable to take it because it's not an easy signal to allow yourself to take until you get some practice at it. So I have absolutely zero fear that me releasing this signal is going to suddenly cause me to be arbitraged or faded or the signal to be retired. No problem. So for those of you that see the power of this signal and want to save a few thousand hours of your time to know the exact details of the setup, like here's some of the details here, the 3 immutable rules of the trap trade setup. What are they? The 4 additional factors that cause stronger reversals. How to train yourself to be part of the smart money move. You have to train yourself. You have to practice at this. What are the best stock options or future strategy to employ with this move? How to use our pivot array study to identify important highs and lows to trade against. How to filter these trades with fractal energy trading principles to ensure the very highest probability entries. How to use scanning techniques to have opportunities emailed to you as markets move. Or how to build a whole trading system around one trading setup. So to that end, I do have a class. I've got over 3 hours of live content with this class. We've got slides, replay videos, studies, scans, your questions and answers, how to identify optimum conditions for price movement from the trap, how to set up your chart to increase your probability of detecting reversals. There's a key to that. How to train your eye to look for these reversals if you're not using the pivot array. How to use thinkorswim to scan for these signals on a real-time basis. And it's available for immediate access. You don't have to wait. You can get access to this class tonight. Before I get into the details of the class, though, and how much it costs, I want to talk to you about the bonuses, because in addition to the live content, the slides, the pivot array scans, the examples, the archives of the session, plus the ability to watch the archive video as much as you want to, interacting with me for your questions, You will also receive the following bonuses for signing up today. Number one, the Fractal Energy Trading class. So this is a class that I've been teaching for some time. It's a 5-part video series, video archive and slides, which spans 5 hours. So put 5 hours into it. Learn how to read fractal price action. If you want to get better at reading price action, if you want to understand how range contraction and range expansion are what's actually happening in today's market, this is the class that you want. Also, understand how to interpret energy signals on your charts. I believe this is one of the most accurate technical systems currently on the market. I have not seen anything to rival it right now. So making price a focus for your analysis instantly puts you a step ahead of most traders that are using lagging signals that are several days or several candles behind what you can do. Retail value of this currently goes for $100, so that's one of the bonuses for this. Bonus number 2 is the Fractal Energy Study. So it's the actual study that we have that allows you to do this in multiple time frames, scan against the signals. The study's not available with most trading platforms. So it's actually still, there's a lot of platforms that are out there. thinkorswim is one of them, which is not available, unfortunately. But TheoTrade makes it available to our customers as part of our service. So retail value, I've seen it as high as 150 out there. So the pivot array study, which I believe that you guys have already received for this, right, provides you a way to determine those price pivots and reversal levels. Also possible to scan against signals with this study, like I showed you guys with the dynamic watch list. Study is not available. This is a custom study that was created for TheoTrade. Retail value, 150. So the bonuses are stacking up here, guys. We got a couple of trade reports that we're going to share with you as well, too. Bonus number 4, overview of the game plan for daily trades, how it worked out for the day, lessons from the trades learned, stock scans, swing trade charting ideas, game plan for the next day, daily and intraday chart thesis planning. So this is watching over the shoulder of a professional trader as they get ready for the next day and saying, this is what I'm going to do. Then the day after that, you can see what they actually did and understand how they circle back and change your approach from that. Retail value 27. The bonuses are stacking up. Number 5, weekly intermarket technical report. So again, it's geared to swing traders that are looking for treasuries, S&P 500, oil, dollar. Retail value $47. And then here's the big one. This is the one that gets everybody excited. Hanging out with TheoTrade for a whole month. This is a 1-month access pass to the live TheoTrade room. I'll show you what that looks like in a minute here, even though nobody's on it. Daily coaching sessions with timely topics on stocks, options, futures. So this is, we're doing about 6 hours a day of live content on this room, interacting with our students. The chat room is open 24/7. We have people overseas on this thing all the time. There's always somebody to talk to. So that's our live trading chat room. Instructor and coaching archives. If you missed something from the day, you can go back and watch it. We have over 2 years of information on this. So start here section if you're new or experienced. Start here with the 22 videos to get you started the right way. If you need studies, if you need indicators, if you need scans, we have all included for thinkorswim users in your 1-month access pass. There's a ton of material in there. Retail value, $150 to hang out with us for a month. Okay, so let's put this all together. What is the cost? So the Fractal Energy Trading class is $100. The Fractal Energy Study, $150. The Pivot Array Study, $150. Daily Idealized Trades Report, $27. Weekly Intermarket Tech Report, $47. 1 month of TheoTrade access, $150. Plus, you also get the TheoTrade discounted TD Ameritrade rate, which I cannot disclose over the audio, but we can let you know what that is. So you get access to the TheoTrade discounted TD Ameritrade rate by signing up with this. So if you add up all this stuff, new math, whatever, that's over $600 in bonuses, not including the trap trade class. So we will include all these bonuses if you sign up for the trap trade class today for a one-time total of $199. That's it. $199 gets you all of this information, which is going to take you some time to chew through, but that's the value that we provide at TheoTrade. We're always going to err on the side of giving you great information. So to get access to this, go to theotrade.com/trap, T-R-A-P, trap, theotrade.com/trap. And before I get into the questions, there's normally a bunch of FAQs that people hit us with. So let me just go through some of those right now. Again, theotrade.com/trap is where you go to sign up tonight. Is this a trial subscription? Will there be additional billing at some point in the future? So this is what Chris is asking right now. No, this is not a trial. This is a one-time $199 fee. If you want to continue with us after that, you can apply this towards an annual subscription. Second question, I don't have experience with options or futures. Will I be able to follow along in the class? Yes, I give the first examples on how to use this with stocks. I also discuss using this strategy with simple futures, simple option strategies. We're not going to overwhelm you with, the Greeks or something like that, right? It's meant to be a simple setup. Next question. Don't forget, go to theotrade.com/trap to get signed up tonight. Can I use this with my 401k? Can I use this with an IRA? Yes, it works with any chart, any instrument, any time frame. I see this all day long. I see this on daily charts. I see this on weekly charts. I see this on intraday, tick charts, everything. I work full-time and I can't trade during the day. Can I use this? Yes. And in fact, what I think is great about this is the pivot array scanner will email you the setups, let you know, and perhaps if you're just a swing trader, you can set them up for the next day. You can set them up with a limit order, right? So this is something where you can get the signals that evening and then set up your trades for the next day, right? If you can't have access to the market during the day. Or, some people have asked, hey, look, I use a different system. I use a different technical system, whether it's Elliott Wave or ADX or MACDs or whatever it is your current system. Will this help me? Look, I feel very strongly that any system that uses price action as the core of your foundation will help improve the decision-making process and will also speed up your signals, because you don't have that trailing study effect. So I believe in using this with just about anything. Okay? Okay, what if you don't use thinkorswim? Can this system help me? Well, the only functionality that you're going to miss is the automated scanning feature with the pivot array scanner, right? So I teach this material old school. So we just do this, by hand, old school. So you'll be able to manually identify setups first before applying automation. You could go back and use pretty much any charting package with this that you want to. Okay, so again, here's the Trap Trade program available now. You want to go to theotrade.com/trap. If you go out to that page, this is what you're going to see. Okay, so we have support that's available for you. Again, you can read through everything, all the deliverables that you're going to get. If you need assistance here, you can leave a message for us. Should be available for you for that. You can also email us, support@theotrade.com. When you get to that page, again, theotrade.com/trap. And again, for those of you that have never seen the TheoTrade site, if you go to the TheoTrade members area, this is where you're going to get into the member chat room, right? So the member chat room is available out there. Again, we don't have anything going on right now, but you can see some of the discussions. I mean, there is literally discussions 24 hours a day going on, and TheoTrade. Also, some of the resources that we have out there, like we talked about, the studies that we have. These are all the shared studies that you have availability to. Look at all of these shared links and studies that you can get access to. I mean, just a massive amount, as well as the archives here. Again, the classes archive, you have access to anything that occurs within that 30-day period, but this is the kind of stuff that we built over the last couple of years here. Just look at all the topics that we cover. Okay, so I'm sure a lot of you guys have questions. We got just a couple of minutes left here for your questions. I'd be happy to take those. And again, where you want to go to is theotrade.com/trap.